for Godrej Properties for you on the screen. The profitability has remained quite steady at around 60 crores thereabouts versus 58 crore last year. But I think what will be more important is to track their bookings and debt number, because for the last couple of quarters, debt had surprised the street a bit. So we'll watch out for more details on that one. The revenues, however, have bettered quite a bit. In fact, it's at 330 crore this time versus around 198 crores thereabouts last year. At a similar time period. So overall, there has been improvement in the revenue front. The profitability has improved quite a bit, but we'll have to wait by and see what the other internals are for Godrej Properties. Quickly, let's pull up PNC Infratech as well, because that is also just coming in terms of numbers. So let's see if the stock is reacting. It's high by 4%, so the street is clearly giving a thumbs up to those numbers. But it's a bit of a thumbs down as far as Gulf Oil is concerned, or at least that is what the stock price is telling you. It's down about 6%. Mr. Manish Gangwal, the CFO at Gulf Oil Lubricants, joins us on the show to talk to us about just that and the earnings. Hi Manish, good to be speaking with you. Well, your revenue growth has been around 4.5%. But break it down for us. What is the actual volume figure or the volume growth that you have done in this quarter gone by?
Yeah, so good afternoon. I think we have once again delivered a very strong quarter, I would say. Mahendra Singh Dhoni is our brand ambassador, Hardik Pandya, Smriti Mandhana are our brand ambassadors. So we have hit back-to-back 2 centuries in terms of EBITDA. So our September quarter, we hit an EBITDA of 101 crore, and this quarter we have delivered 111 crore of EBITDA. So really a strong quarter for us in terms of EBITDA growth, in terms of EBITDA margins improvement, overall profitability. PAT has gone up by 29% for the quarter. On the revenue front, we have increased our revenues by nearly 5%.
Yes.
Volume growth has been also nearly 5-6%, 6% actually for the quarter. There have been certain segment of our businesses like factory field business where we supply to the OEMs. That segment saw some sort of a slowdown because the new vehicle sale, especially in the commercial vehicle, has been slightly subdued in this quarter. And one of our key OEMs obviously had a slightly lower lifting. And that resulted in some sort of an overall volume, but still it is 6% volume growth is 2x the market growth. Market usually goes as 3%, so we have delivered double of that.
Right.
If we exclude the factory field volume, our volume growth would have been nearly 8%.
Okay, so volume at a consolidated level is around 6%, and if you remove some of those factors, it comes at around 8%. But you talked about some of those one-offs or issues that led to a bit of a volume limitation in the quarter gone by. What about Q4 now? Are you expecting the volumes to be at a similar trajectory of 6 to 8% growth, or could it be better than that? Because if I have it right, you started off the year with a volume growth guidance of 7 to 8% for the core business and 15 to 20% for the AdBlue business.
So we are continuing with the same momentum. You see, we cannot control the factory field businesses because that's directly linked to sale of new vehicle. But other than that, we are on course to deliver the 2 to 3x growth of the industry, which should work out to nearly 7-8% minimum on the core lubricant side. AdBlue has been very robust for us. So AdBlue will in fact grow much more than 15-20%. It will be closer to 35-40%, in terms of overall numbers for the full year. So yes, on course to deliver a strong volume and revenue growth. Just to tell you, for the YTD 9-month period, our revenue growth is still 10% plus. So we have continued to deliver on the revenue in double digit in terms of revenue growth.
Right. So this is Vinny joining in the conversation as well. Good afternoon. And, let's talk about margins also, because earlier you had given a guidance, I believe, of the target EBITDA margin of 12 to 14%. And currently your margins are at the upper end when you look at it in terms of the levels. It's around 14% mark as well. So are you looking to upgrade and update the guidance on a higher front? And what are you indicating in terms of peak for the margins then?
You see, historically, if you go 3-4 years ago, we have been in the band of 16%, around that, in the 16-17% band. Our long-term objective is to move back towards those range, but it cannot happen in one quarter, So obviously, if you see from a low of 11% to 3-4 quarters ago, we are now moving back towards our guided band of 12 to 14. And obviously, next our ambition will be to go to 14 and 16 and then look forward. So obviously, we are on course to that, but there are 2-3 things which are also happening, helping us. Crude is stable, and so is our input cost has been stable. If you see, our gross margin level improvement is nearly 5.5%. on YOY basis, last year December versus this year. And one of the things which also we have started is that with the good growth happening in the industry and for us, we have invested more in the advertisement and promotion this quarter. So nearly a percentage more in terms of A&P also. Otherwise, we would have been even further in terms of our margins, overall EBITDA margins. But we continue to invest in our brand. We continue to grow our volume and keep guiding on a higher trajectory of margins over a period of time.
Right, and also I just want to understand, because if the share of AdBlue products is rising, that's a bit of a low product margin. And despite that, you've managed to see that increase in terms of margin. So if you could help us understand, what is it that is helping the margins as well?
So two, three things have happened. As I mentioned, input costs have been stable. Then we have been working with all our segments in terms of premium products. So premiumization is happening in all our categories, whether it is motorcycle oil or it is car oil or even in certain pockets of diesel engine oil. So premiumization is also one of the key, internal targets, I would say. And at the same time, overall trajectory with the volume increase, there is a operating leverage which comes in. So that also helps us in terms of spreading the fixed cost over a larger volume. AdBlue has been obviously contributing to the overall EBITDA. As a percentage margin, it does impact the overall margin. So if we are delivering a higher margin, let's say of 14% nearly, our core lubricant margin is even higher. So that's what I can say.
Right, so thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the volumes, margins of the company and where they're headed. Thank you so much for joining in with us this afternoon on ET Now. It's a pleasure having you.